Good afternoon, everyone. Brian Wilson here from Market Structure Edge. Today is August 27th, rapidly making our way towards the end of the summer. I don't know where the summer is gone. Tim is on the road today. He sends his greetings. As you know, he loves to be part of these discussions. Just a couple of discussion points for today. All of your questions are welcome. You can either send a question in on the chat line, or raise your hand, or even jump on audio portion later. If you would please mute yourself during our time together until we are in discussion mode, it would be appreciated, just so there's not any background noise. With that, we'll go ahead and get started. The basic plan is I'll cover a couple of topics, and then I'll circle back and see if we have any questions and what have you. Let's go ahead and start our discussion today with NVIDIA. Obviously, we're getting a post-earnings reaction today. I did a little bit of work on it this morning, and I'll just share with you part of that work, and I shared this in this morning's note. So, take this with a grain of salt. There might be rounding errors here. Part of this came from an internal, worksheet that I keep. But if you look at NVIDIA over the course, and this is 2024, 2025, there's been a couple of just, lights out performances. 16% returns back in February 2024, S&P 500 return. The next day, that same reaction day, 2%. But, this is fascinating. Look at what happened the next 5 days. Returns of 17 basis points. The same exact thing happened in May of 2024. Really good returns. It was interesting here. It didn't really drag the broad market along with it. And once again, average returns during the next 5 days of 17 basis points. If we combine everything here, looking at reaction day for the S&P 500, looking at that next 5-day time frame, we come up with these figures. We have NVIDIA returning 2.3% on average. That's not bad at all. I think every public company would wish that they could have average 2.3% returns after earnings. Average S&P reaction day return, actually slightly negative. Average return the next 5 days, right around that 17 basis points that I showed you in the first two examples. Times that the S&P was positive on reaction day, 4 out of 8. Times that it was positive the following week, 5 out of 8. What are we seeing a little bit of? Well, we're seeing a little bit of a mean reversion trade. In other words, you might have tremendous influence day of, and we had a couple of those days, but it's not carrying forward to the next week. And even if we look at today's trading, and sometimes it's tricky getting to the top of my screen. Let me see if I can get this. So if we look at today's trading activity, notice the returns here. So there's only one sector right now that's actually positive on the day, that being the tech sector. So yes, the S&P 500 is positive, but there's no other sector energy is slightly positive, but really no one else is participating other than tech. And if we look inside tech with today's trading, we're getting IT services being higher, semiconductors being higher, and software being higher. But I found that fascinating when I was looking at the daily look that, yes, NVIDIA pushing the market higher, but at least so far today, it's very much been a tech trade. Wanted to share something with you from, we'll call it a market structure perspective. Those that track with us are aware that we follow market structure. It has a great impact on the market over time, and a couple things to share with you here. We'll start with this look, and I'll just explain it very rapidly for those who are not familiar with it. And this is actually a fascinating look. I didn't even notice this until we're talked right now. Active money back in 2020, 13% of the market. What that means, it's a percentage of daily trading. So think about, but I'm just making up these numbers. The broad market trades 100,000 shares. That would mean that of that 100,000 active investors, uh, those who care about fundamentals are trading 13,000. So that's what the percentages mean. What I want to share with you is what's been happening to passive money over time. Passive money just continues to grow. I was looking at this exercise the other day, and this number must have been from maybe 2017 or something. Passive money was about 20% then. What is passive money right now? It's up to about 26%. So this is our S&P 500, and those who aren't familiar with Edge, we have a sister company called Modern IR, and we do investor relations work on the Modern IR side of the business. So that's the report that you're seeing right now. What I wanted to share with you, look at the 200-day average for passive money. So it was 24% just a couple years ago. As of yesterday, looking at the last 200 days, it's up to 26%. So we just continue to see passive investment influence growing over time. And this is an important consideration as we see that influence growing. What do we tend to see happening in the background? Well, we tend to see average pricing. So this was a regulation that came into play back in 2007. It's called Regulation NMS, National Market System. And that requires stocks to trade between the best bid and the best offer. What does that encourage? It encourages average pricing. What does passive money try to track over time? Well, it tries to track averages. That's the price between the best bid and the offer. So you get average pricing. You have a few big brokers. They will execute trades. They're fined if they aren't consistently between the bid and offer. What does that tend to introduce? Average pricing. So what we see over time is from an active investment perspective, active investors, of course, seek outliers. But let's say, for example, and I'll see this on the investor relations side all the time, you'll get a company that performs really well after earnings. What will tend to happen over the next, let's say, 6 weeks or so? It will move back down towards its peers because passive money is tracking average pricing. So just wanted to share with you what's happening there behind the scenes. We continue to see passive investment influence growing. I think it's going to be an interesting discussion point here. If the markets do go, let's call it, 23.5 trading here in the future, what's that going to mean for passive investment impact? Will that continue to grow? Will fast trading impact continue to grow? And interesting dynamics in play there. I think that would be a good TIM discussion piece. Just looking at the chat items that have come in, Richard made a comment that he likes Tim's post on X, like Netflix. Richard, I agree with you. Tim is one of the smartest people that I know. He was actually on CNBC a couple of days ago. If you guys happened to catch that, I think he might have sent the link in a recent note, but that was on Wednesday. Maybe I can find it for everybody and put it in tomorrow's note. Boris, question regarding regulation NMS. Does it also apply to options? That's a great question, Boris, and I don't know 100% in regards to that question. So let me look that up, and I'll have the answer. Let me make a note of that. So I'll look that up and I will have the answer for next week. But thank you for that question. See if there's anything else for that. I'll circle back here in a moment. We have one or two people that are typing questions. Let's go over to the model portfolios. So every day we send out what's called our model portfolios. And let's walk through where we're at right now in terms of what those look like. All right, the first one is our Focus Fives. This has currently been our main emphasis. And what you're looking at here from a charting perspective is from June going forward. And it's just incredible performance. From that time frame, get up to the top, from the beginning of June going up until yesterday, it's returned about 16% versus the broad market that's returned about 1%. You can see that on the chart here. You know, one nice thing about this portfolio is it really does not change very often. The criteria, and as you look at the portfolios, you can always look at the criteria button or criteria tab, and you can see what it's looking for here. What this one is looking for is very stable names. You're looking for sentiment that's 5. You're looking for market cap range. What 3 is small cap, mid cap, large cap. So greater than or equal to large cap. Short volume trend is moving lower, and price per close is greater than 20. And it doesn't change names very often. So it's very good. It's very stable. It's had vast outperformance relative to the market here over the course of the last couple of months. I'm currently in all five of the names, just as an FYI. Focus Passive. This was our main portfolio for quite a while, and you can see from the performance why it was. We were rocketing higher up into the mid 50s for a period of time, with the broad market at about 10%. So what this fund is doing, it's as the name indicates, it's looking at passive investment as the lead behavior. So in that case, think about index funds, think about ETF, think about quant fund influence. We put quant funds in that bucket as well. Rocketing higher, especially during the month of May, and it's had difficulty since then. It's still an outperformer, but it's kind of lost its way. That's part of the reason why we took it off of the daily email. If you get the emails from us, what you'll currently see is the recommendations in the Focus Fives every day. Let me share with you briefly what's happening with the other focus portfolios. The next one is our Focus Momentum Fund, and it is, like the name suggests, it's momentum. This momentum looked very much like the passive portfolio as well. It's lost its way a little bit since the beginning of July. It's still, a vast outperformer. If you look at its performance, 27% versus 12. So still handily beating the broad market, but it's not done as well over the last couple of months. And the takeaway is it's really not a momentum market. The next one is Focus Mega Caps. And part of what we're discussing here with you, there's a lot of ways that you can slice and dice things. And I'll share with you our daily trading ideas in just a moment. You can trade on a daily basis, or you can capture some of these portfolios, and a couple of these just don't have very much turnover, which is great. The Focus Fives very rarely changes names. The Focus Mega Cap that we're looking at now doesn't change names very often either. And it is as it suggests. It's mega cap names. If you look at the current portfolio, Google, Amazon, ASML, Broadcom, Nvidia, that's what it was holding today. It exited one fund and moved into Nvidia, ironically. Uh, but that's where it's at right now. And you look at its performance, it's doing great. 18% year to date versus returns of 12% for the S&P 500. So it really just depends on your comfort level. If you prefer to be in the mega cap space, you can see when the market was having difficulty at the beginning of the year, and this is the SPY, it was actually doing really well, and it's been outperforming the market from that point going forward. So terrific, nothing wrong with it. Once again, it just depends on what your comfort level is. Lastly, what we call the Focus Contrarian Fund. And this is looking for, I won't call it garbage, but it kind of is. If you look at the criteria for this fund, it's exactly the opposite of what you would normally buy. We're looking at sentiment that is less than 2. So in other words, very weak demand. We're looking for that sentiment trend that's actually been moving lower over time. We're looking for short volume or supply that's actually moving higher over time. So these are the things that you would not normally buy. And perhaps predictably, it did terrible at the beginning of the year. The market was kind of moving sideways, moving a little bit lower, and this, lost its ground. It was down 25% at one point. But you can see the recovery from that point moving forward. I mean, the takeaway here, you obviously don't want to own this in any kind of this. This wasn't even a bear market, but any market that's moving lower, this does not perform well at all. But look at the returns from May 1st going forward. It's up 39%. So it can be an extremely profitable fund. Perhaps position your portfolio accordingly. Maybe take a lower overall dollar amount if you're dabbling in that particular portfolio. I'll stop my screen sharing for a moment, see if we have any other comments coming in. Question from David. Can passive investment be defined as a method someone follows, or is it more of a general description of following the average? If active investments are by active traders, I guess who does the passive investing? Hope this makes sense. Sure does, David. So that basic bucket and passive investment, it can sometimes be a little bit of a misnomer. The way to think about the passive investment bucket are investors that are trading based on characteristics. So what are the characteristics that they care about? Think about market cap, think about sector, think about industry, think about volatility, think about factor investing. Those are some of the things that are playing into passive investment models. And once again, the components that we put into that particular bucket, and I think of it as model-based investing. So think about index funds, which is not having as much influence as they once did. Think about ETF activity, which is only growing over time. And then think about that last piece of the equation, that quant fund aspect, the DE Shaws of the world, the AQRs of the world. It's that type of activity that we're seeing that's impacting that particular bucket. Barry Bailey posted a I think Barry posted it for us. If you're interested, thank you, Barry. If you're interested in Tim's CNBC telecast from a couple of days ago, it is in the meeting chat, and you can grab it from there. I appreciate that, Barry. Thank you very much. And that was a fascinating piece with Brian Sullivan 2 days ago. They were having a good time going back and forth with each other. Let's take a look at the low volatility portfolio for a moment. Those who know me know that I tend to trade from the momentum portfolio, and momentum doesn't have as many choices right now. So what you're looking at right here, these are defined. And it's as the name suggests, daily trading ideas. So what this is communicating is if you picked up Marvell between the entry low and the entry high, and let me get you the time frame here. You can see it right here on the question mark. It's 90-day data. I can't really point to it because it goes away, but it's 90-day data, and we're calculating odds on a 2% return in 1 to 5 trading days. So in other words, looking at Marvell, during the last 90 days, 100% of the time, it's returned at least 2% within 1 to 5 trading days. You pick it up within the entry low and the entry high, and you sell it when it's 2% higher. It's the concept of hitting lots of singles or doubles over time. One thing that you do want to watch out for, we're not seeing a lot of really high volatility plays right now, but at times volatility can be extreme in some of these names. So what I mean by that, you can see intraday volatility movement from lows to highs of sometimes 10 to 12% on some of these names. So you do want to be aware of that. If you're picking up these names, they can swing that much the other direction. They can swing lower by that much, and I've had that happen to me, a few times. So just be aware of that. I tend to gravitate, just a personal choice, towards names that are 5% or lower. That way I can kind of hang with the name the next day and not be too overwhelmed by that daily swing and volatility if it's going against me. Right now, we're getting a lot of emphasis on the low volatility portfolio. We have 8 names right now in momentum. That was north of 30, a week and a half ago. Currently, the low volatility portfolio has 13 names, and it's heavily slanted towards the financials. So if you look at the financials, 3, 4, 5, 6 out of the 13 are in the financials. Is that something that a setup ahead of Jackson Hole? I don't know, but the same principle applies whether you're trading from momentum or low volatility. Follow the entry low, follow the entry high. I'll give you one example. If I have time this afternoon, perhaps I'll place a trade. I have a meeting coming up shortly after this one. But if you look at Costco, it's down, 1.87%. And if you look at the normal intraday volatility, well, it's down more than its normal intraday volatility. Now, I don't know if there's any news in the name today. It's got a 96% chance of success, looking back at the last 90 days. So it's got a really good success rate. I don't pick things up if there's news in the name, but once again, I'll take a peek at that a little bit later. Let me see if there's any other things that came in to the chat line. Not so far. Let's go ahead and take a look at the path ahead. We mentioned already that the market tends to mean revert over time. We saw that with NVIDIA. We see that as a general principle with passive investment activity. If we look at the overall setup right now for the market, and I'll share with you a couple of portfolios that I track once it comes up. So looking at my all equity portfolio, it is what it sounds like. You can see that sentiment is declining down to 5.1. Might break below neutral here over the next couple of days. We look at large cap weakening over time. That is also down to 5.1. Magnificent Seven got down to 4.1, starting to rebound just a little bit up to 4.4. Mega caps probably the strongest right now. Still a pretty good look there at 5.5, but you can see this general weakening as we make our way down here. Mid caps have broken neutral down to 4.9, and sentiment, once again, that's our demand algorithm, with 5 being neutral. Small cap down to 5.1. Also, that trend line is just moving lower. So we do the next big item from a context perspective, and you always want to think of context, what's happening in the market. The next big item, other than Jackson Hole, is month-end activity. And if we look at what's been happening the last few months at month-end specifically, sometimes they can be inflection points. And what I mean by that, it's periods where strategies and tactics can change. The inflection point back in March was extreme. The market had been under pressure. A lot of big tech had been under extreme pressure, and we just caught a bid. And big tech specifically caught a bid at that particular time. But it happened at an inflection point. And that's what this particular square is pointing out. You have options expirations, the other squares, and you have the month-end time frame, which is also expirations activity. It's the month-end options that are expiring. You look some of these other particular months, a little bit of an inflection point, kind of sideways trading, market moving higher after that, market moving a little bit lower going into May, caught a bid. After that, market moving lower into June, caught a bid afterwards. Market moving lower into July, caught a bid afterwards. So you see that inflection point that can occur. What I'm generally seeing in the data, and once again going back to some of those portfolios that I shared with you earlier, I'm generally showing weakness. So my short-term forecast would be probably a continuation of some of these weaker prices, with a possible inflection point then being at the month-end time frame. We're very well aware, as I showed you earlier, that the market loves to mean revert. We really haven't spent any time below neutral. I think it was May. Let's circle back for a second. We have to go back to the middle part of May, the last time that the market even moved below neutral. And you can see that we've just been kind of grinding very, very slowly higher on the SPY, but really kind of going nowhere. Most of the returns were from the extreme lows in March, and that stretch higher, that was about a 2-month stretch where we got most of the returns so far for this year. So that's what I'm seeing right now. Can I address any other questions for anyone? Steve, did you want to talk for a second about the article that you mentioned?
No, I was just wondering what kind of an effect, because obviously we're going to start getting some false information coming from the government.
Can you describe what the article is? I didn't have a chance to read it.
It's basically talking about how Besant is taking over and putting pressure on Warsh on it. I think if Warsh had his way, he would raise rates.
Mm-hmm.
And Besant is in there telling him to cool it. I mean, that's a quick overall summary of what's going on, and we've not had this Greenspan once. Apparently, this took place, and it did not turn out well. All of the major investors around the country, the big boys, are all admonishing Besant, trying to take this over. This and not letting it flow the way that it normally flows, by bonds. I'm talking bonds, of course.
Yeah, yeah.
So,
And the Fed being independent, right?
yes, the
Yeah,
total independence of the Fed
yeah,
is no longer there.
yeah.
And the combination of the two has money managers all over the world pretty much freaking out. So
hmm hmm No, it's good
that
observation. And I want to say last week, something like that. The weeks blend together. But you can't track the bond market perfectly with edge data, but you can still track it. And what we're looking at here is, sorry, down here is short volume. And if you saw market participants that were really concerned, we would start to see, a real increase in short volume. And in other words, just hedges that were being created in the market. What are we seeing over the last few weeks when the bond market has been more of a conversation piece? Not much. It trending down if nothing else. Now maybe part of it is August trading. In fact, the last 5 years, it's generally been quiet in August. Even with active money having less overall influence. But we can still read it with short volume. And right now, I mean, the market is saying everything's okay. Whether that's accurate or not, that's another story, but that's what short volume is communicating right now.
I think one thing that you can watch is the amount of money that was dropped into JEPI. I mean,
hmm
it dropped a lot today, but I think that was primarily people taking money out to put into NVIDIA.
hmm
But the JEPI is a really good indicator of where that money is flowing. So
Interesting.
that in JEPQ.
Well, that is awesome. Well, everyone, that was what I wanted to cover today. Uh, I'm going to go ahead and stop the recording here. Just want to thank everyone.